As of the closing bell on Friday, January 30, 2026, the market is closed, and Rezolve AI plc, trading under the ticker RZLV on the Nasdaq, sits at a final price of $2.58. This represents a sharp intraday decline of 9.47% from its previous close of $2.85. While a nearly 10% drop in a single session usually signals a localized panic, the surprising data point most investors are missing is the massive volume surge accompanying this move. RZLV traded over 29 million shares on Friday, significantly higher than its 90-day average volume of roughly 22 million. When a stock breaks down on heavy volume, it typically indicates institutional liquidation or a massive repositioning, yet this sell-off occurred immediately after the company announced an oversubscribed $250 million registered direct financing round. Usually, an oversubscribed institutional round is a vote of confidence that sends a stock higher, but the market has reacted with a violent rejection, creating a significant disconnect between institutional smart money commitments and the actual price action on the tape. The common market narrative surrounding Rezolve AI is that it is a high-growth speculative play in the agentic commerce sector, a niche within artificial intelligence focused on autonomous shopping and digital assistance. Many retail investors view the recent price action as a standard correction after the massive guidance update earlier in January 2026, where the company doubled its 2026 revenue projections to $350 million. The bulls are pointing to the fact that December 2025 was the first profitable month for the company, suggesting a fundamental shift towards sustainability. To the average observer, a stock trading at roughly $2.58 with an analyst consensus price target near $11.42 looks like a generational buying opportunity. However, a deeper contrarian perspective reveals why the stock is under such intense pressure. The reality of the market behavior suggests that while the $250 million funding is intended for growth, the immediate effect is massive dilution for existing shareholders. Investors are currently grappling with the funding gap between current cash burn and the arrival of that $350 million revenue goal. Short sellers have noticed this vulnerability. Short interest has been a significant factor in RZLV's volatility throughout January, with the stock seeing 20% to 30% price swings in a single week. The borrow rates for RZLV shares have remained elevated, indicating that while institutional firms like BlackRock and Citadel have reportedly participated in funding rounds, other market participants are aggressively betting against the company's ability to execute on its aggressive annual recurring revenue targets. The daily and weekly price swings have been nothing short of a roller coaster. In mid-January, the stock gained 30% in a week following bullish notes from H.C. Wainwright and Cantor Fitzgerald, only to plummet 23% a few days later when the follow-on equity offering was filed. This suggests that every time the company provides a positive fundamental update, it is being used as liquidity for larger players to exit or for new offerings to be priced. The volume patterns show a heavy sell-the-news mentality. Institutional buying behavior appears split. While some are anchoring the direct financing at a premium to previous lows, the open market has seen consistent distribution. Broader macroeconomic forces are also playing a role. As the Federal Reserve's interest rate path remains a topic of debate in early 2026, speculative AI software companies with high price-to-sales ratios and lack of historical profitability are being revalued more harshly than established tech giants. Rezolve AI is essentially a show-me story. The market has heard the $500 million annual recurring revenue target for the end of 2026, but the current market capitalization of approximately $1 billion suggests the market only partially believes those numbers. If those targets are met, the stock is objectively undervalued, but if there is even a slight miss in the first 2 quarters of 2026, the floor could drop further. Short interest data for RZLV can be found on platforms like Fintel or the Nasdaq's official short interest reporting. Investors should pay close attention to the days to cover metric. If the volume begins to dry up while the short interest remains high, the stock becomes a prime candidate for a short squeeze. Conversely, if volume stays high and the price continues to trend lower, it confirms that the short thesis, centered on dilution and execution risk, is winning the tug of war. Retail investors often chase these spikes hoping for a squeeze, but the risk of doing so in a company actively issuing new shares is extreme, as the new supply of shares can effectively kill the momentum of a squeeze.
Comment how many shares you currently hold and what your take is on the rising short interest. Do you think the institutional anchor investors are seeing something the retail market is missing? Or is this just a case of big money getting better terms while the stock price suffers? Technically, Rezolve AI provides an AI-powered commerce engine called Brain Commerce, which uses a proprietary large language model dubbed BrainPower. The goal is to move beyond simple search bars and into a conversational interface that increases conversion rates for retailers. Their business model is shifting toward a recurring revenue stream, but they have also been on an acquisition spree, recently picking up companies like Crown Peak and VisionSense to bolt on more capabilities. This aggressive, inorganic growth is another reason for the skepticism. It is often difficult for the market to distinguish between organic product demand and revenue bought through acquisitions. Looking ahead, there are several possible scenarios for RZLV. In the optimistic scenario, the $250 million in fresh capital allows the company to rapidly integrate its recent acquisitions, hitting that $40 million monthly revenue run rate by December 2026. If they prove they can maintain profitability beyond that single month of December 2025, the valuation gap between $2.58 and the $11 analyst targets will likely close quickly, as institutional long-only funds feel comfortable entering. The bearish scenario is that the integration of multiple acquisitions becomes a clash of cultures and technical debt, leading to a slowdown in organic growth. If the company has to return to the capital markets for more cash before reaching its 2026 exit goals, further dilution could push the stock toward its 52-week low of $1.07. Upcoming catalysts include the first quarter earnings report for 2026 and any updates on the closing installments of the private placement scheduled for February and March. In summary, the expectation for Rezolve AI was a massive rally following a $250 million oversubscribed funding round. The reality has been a 9% drop on heavy volume, proving that the market is currently more concerned with the immediate dilution and the high bar set by management's aggressive revenue guidance. The disconnect between the strong buy analyst ratings and the weak price action is the defining characteristic of RZLV right now. Investors should avoid the noise of social media hype and focus on the cold, hard numbers of the next two earnings cycles. If the revenue growth is real and organic, the current price is a footnote. If it is purely a result of financial engineering and acquisitions, the volatility is only just beginning. Always remember that in the world of small-cap AI stocks, volume is the ultimate truth teller. When the price moves one way and the smart money announcements go the other, the market is telling you that the risk profile has changed. Keep a close eye on the borrow rates and the institutional holding updates in the coming weeks to see if the big players are actually holding their positions or if they were just looking for a quick flip on the offering terms. The choice to stay in or exit depends entirely on your belief in their agentic commerce execution over the next 12 months. Would you like me to look into the short interest trends of its direct competitors to see if this is a sector-wide move or specific to Rezolve AI?